Hey guys, welcome back to this week's Portfolio Update. We kind of got beat down, beat down hard compared to last week. We were starting to inch up in a lot of places. I was above 70K. I think I might have hit 71K at one point. And yeah, and 1 week we lost all of that. We got Gevo going down like another 52-week low. And yeah, it's 1 cent above his 52-week low. So it's getting worse and worse. And depending on, they're talking about a recession in 2023, depending on how the Fed interest rate thing goes, which apparently they might keep going because of strong economic data and blah, blah, blah. The point is that, look, this has never been a to the moon channel about Gevo. I've never been one to shy away when things are bad for them. The recession hasn't even gotten started yet, and this could get a lot worse. Now, the topic I want to bring up is the likelihood of Gevo delisting. Now, we all know that the things that are happening right now in the short term aren't really Gevo's fault. But that doesn't change, what's going to happen. Gevo, I never thought I'd see Gevo's this low, but it is this low. And if Gevo gets below $1 for 30 consecutive days, Gevo is in danger of delisting. Now, if we take a look at the Nasdaq rules, now I'm not going to read all this, but the gist is that the company needs to trade for 30 consecutive business days below $1. Now, half a year ago, I would not have thought that Gevo could do that. And Gevo might not do it. It's still at 179. But given that the recession that we're supposed to have didn't even start, this is a possibility. So what happens after we get there? Well, a company trades for 30 consecutive days below $1. They get a deficiency notice. And after that, it has 180 calendar days to regain compliance. And regaining compliance means that it needs to go above $1 for 10 consecutive business days. So it sounds like it should be really simple for Gevo to do. But yeah, given how it's been performing, yeah. Now, what is the likelihood of this happening? Well, if Gevo does nothing about it, fairly likely. But keep in mind that it needs to trade below $1 for 180 calendar days. Well, 30 days and then 180 calendar days. And then the company can request an additional 180-day compliance period. So let's say a year. The EBITDA from Gevo's RNG plant, the project that is online now, it should be hitting next year, depending on CI scores approved by CARB. Now, there is a backlog at CARB, but they expect the pathway approval to be in early Q2 2023. So that revenue should be hitting next year. So I guess what I'm saying is, the stock price should be above $1 by the end of next year, by the time this runs out, assuming, Gevo does even hit this. And if it doesn't, and if that means something went wrong with this, and that is a huge red flag for Gevo. I'll be the first to admit that. If it screws this up, that it already has a customer with BP, if it manages to screw up this almost guaranteed revenue and make it not so guaranteed, yeah, that is a huge problem. And now if all that happens, yeah, shame on Gevo, absolutely. But what it will probably do, if all else fails, is another reverse stock split. Now, this is something that Gevo has done 3 times before, one in 2015, one in 2017, and one in 2018. Now, it is never a good thing for a company to do a reverse stock split, and it won't be a good thing for Gevo to do it again. I'll be the first to admit that. And yeah, that will be a little bit rough for my investment in the short term. Now, long term, as long as Gevo makes it to 2025 and builds the Net Zero 1 plant without any delays or anything like that, its future is cemented. It's already got billions of dollars in take-or-pay contracts, and any Gevo holder should be reaping the rewards then. But it kind of needs to get through this first. So, worst case scenario, Gevo will probably do another reverse stock split, which really, really sucks and looks bad for the company. But, it is what it is. But anyways, take care, have a great day, and eat your vegetables.